Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 24th. Mike Boutros with you on the horn. Great to be with you guys this morning. After a little bit of a gap there, sorry about the miss on Tuesday, was out, but we are back, and there is an interesting start. The week has been quite rangy. Okay, we got a lot of stuff that's sitting in its weekly opening range, heading into the open of Wednesday trade. So lots to discuss to cover things up for the week. ECB came out, no change on that as expected. Still commentary could move things, but we'll continue to monitor that throughout the session. So on the menu, obviously, we always hit DXY. We're going to go with Euro, Sterling, Aussie, crude from last night, still holding right near the highs into the open of U.S. trade. We'll circle back and hit Kiwi, dollar Swiss, gold, CAD, and yes, Pete, I got you on the SPX, sir. We'll take a look at that. A quick look there, just because we're trading near the highs. This is what I'm looking at, Pete. It's make or break. You know what I'm saying? Like ideal scenario, again, ideal scenario in my world, this thing spikes into 3020s, 3026. 3020 is going to be the high close, the high day close, and the high close for that matter. And that would be sort of a nice touch for a failure point, maybe a spike, you know what I'm saying, into the upper parallel, which would fake everyone out near 3031 and then failure. It's hard to see the catalyst right now. I mean, earnings have been split. There's been really some really strong upsets and some really nice surprise. I don't know if you guys saw Tesla this morning. This thing's ripping higher. But long story short, that's the idea. 3020s. Look for a reaction there. Anything higher than that, and we're really, I mean, you're just going on slope. I mean, it could be a ripperoo up into like 3045. I don't know. But Pete, definitely looking for some sort of pivot as we get into this region here. All right. So I guess we'll put that as number one. Just a quick recap there on SPX as we start off the session. Here's what it looks like, guys, on the DXY. So everything is good and dandy. Here's the weekly chart. Okay, we've been following this thing quite closely. Last one was right here, I believe. Yes, on the 22nd. We'll hit the intraday chart in a moment, but here's the weekly. Okay, the major slope from 2011, the parallel that caught the high 2.5, 3 weeks ago, right into the start of October trade. Beautiful momentum. Looked like it was meant to make a breach of this long-standing multi-year trigger. Still hasn't broken, right? Dismiss that as a false break, if you'd like. Here's the pullback. Okay, we got the break in price as far as just an objective slope support off the lows from last year. Okay, but we didn't get the break in momentum. Now, you could say that we made the break last week because we closed just below that trigger and we're checking it now as resistance, but it's a real tight stretch. So look, 97.87 is kind of my line in the sand. That's the 618 of the drop off 2017. I mean, in an ideal world, again, any intraday, intra-week spike should find failure in that region. That would even be testing a push it back through that basic trend line as resistance, but I want to see failure here. Okay, we're looking for failure on a stretch. If this break is legit, the next major downside target is 96.80. That's the 618 of the entire yearly range, an objective, no BS, just level. And you also have basic slope. So parallel extending off those lows, you know what I mean, converges right there. Just a nice spot. So that's what I'm thinking on the longer term. Okay, and the whole objective is to find some sort of failure point on any type of rally in the DXY. So that's the weekly. Daily chart looks like this. Things get a little bit hairier on the daily chart, but look, the levels are clean. Let's just say that. First things first. Sorry about that. First things first. There's that trend line. You broke. There's 97.87. It's also last month's opening range lows. Okay, so it's a nice objective point, and it would require pushback through that 2008 trend line. So nice spot to kind of mark as looking for failure points there if it rallies. 98.11, I just have that highlighted in time. That comes in basically into the end of the month as we close out next week, mid next week. So NFPs are on tap next week. You got FOMC on tap next week. It's just a massive week of event risk for the dollar. So levels to keep in mind. Downside targets, again, 96.80 comes up as the big level of focus. Just above that, I do want to bring your attention. I had this highlighted here, but not with a level necessary. It's basically 97. And look what, interestingly enough, look what 97 ends up being. Well, look at that. 96.96 is the January high. Okay, so you get some really nice confluence zones here, just a little bit lower, right? Into the 97 handle, even if you dribble 96.80s, right, would satisfy that 618. And then you'd look for, a larger reaction, whether it's going to be some sort of recovery or an accelerated breakdown if it does go right for the yearly open, 96, I don't know. But the point is that's sort of your major cushion area of support on the next downside leg. All right, so broadly speaking, weekly charts, daily charts, all highlighting same regions of focus here for DXY. Initial support, right, 96, 97.30. It's just the 618 of the entire rally from June. You did close below this here on Friday, but count that as sort of a false break or a spike through or whatever you want, right? It's been a decent support still all week. So just watch that pivot near term on the immediate front. These are your major downside targets. 97.87 is where you want to see failure on any spikes. 98.11 would be like resumption. Look for a larger recovery. Here's what it looks like on the intraday. All the way down. So on this, I can't help but think it just made its weekly opening range, just like Sterling did, just like a lot of the other majors that we're going to go over today. We're just sitting there, right? Now, what do I want to say about this? I mean, even on an intra kind of week, intraday type of move, 97.71, 2018 high, now is kind of going to be the level we're focused on. So we're going to slide that down to here, just above the weekly opening range highs. So, look for a pivot there. If you see a break, you'd look for that top side stretch. Both of these levels, again, levels of interest for possible exhaustion. On the downside, the ideal scenario that the weekly opening range breaks lower, there's 96.70, 96.69. And remember, again, the 97 level that we just talked about comes in slope right here. So everything matches up real nice. We just need to get some momentum behind this thing. The one preface or the one kind of warning I'll give you guys is the fact that we are heading into such major event risk into the close of the month, right? It's not like the FOMC is going to necessarily be a surprise, but there has been a lot of discussion. Let's just quickly review. Here's what market expectations are for this interest rate decision next week, right? We already have 94% chance or priced in the markets that we are essentially getting another 25 basis point cut. Devil's in the details. It's all about the commentary, yada, yada, yada. You guys know the drill. But at the end of the day, this is priced already. And if anything, the market's pricing it in as we speak as this thing continues to move lower. Bottom line, watch for a pivot here at 97.21, 97.31 near-term support. This is also the objective weekly open, right? So just a pivot level that you need to pay attention to irrespective. And then if you get the downside break, 97 and 96.70 are the levels to go for. Questions on DXY? Hey, Pooja. Yeah, no worries. Says, sorry, I'm late. Looking for Eurodollar longs, adding to Kiwi longs. Crude shorts. And SPX, I'm not very sure, but resistance 30 So Puja, we just went over SPX at length for Pete here in the beginning. Here's the chart again, real quick. Ideal scenario, it kind of spikes into 3020. Yeah, 3026. That region right here, that's the record high day close, is 3020. But we never really made an objective pullback from upslope resistance. So I'm still looking for a failure point, right, for the move lower. So again, as usual, I'll post a replay to this Puja, but the levels haven't changed. Same levels that were posted. I think I'll get you the date. I have it. It was the 15th. Previous update. All right, so with the DXY essentially sitting in its weekly opening range at support, where's Euro? Well, I agree with you. The broader play is long on the Euro. We've been long on the swing side of things. From the intraday side of things, I've been looking for some sort of setback. And yesterday we looked at a 111.06 and we were talking about it. Here's what the update looked like heading into the ECB. So thinking, maybe we get one more low here before some sort of exhaustion point. So 1106 again converges on slope now on the lower parallel, even 110.82, right? On a spike in ECB, I was like, you never know. This guy could come out Draghi and, hiccup or something. The market's just gap lower. Would be two reference points I'd want to pay attention to, not too far off, right? Didn't get it really. We're still in the weekly opening range. We're still in this upslope off the lows from October, from the monthly lows. And there's big levels stacked up on the upside. That's my concern with the longs. So if you're holding longs of any amount, of any consequence, keep these three levels in focus. 1167, 1187, 20 pips later, okay? And then 112.09. All levels of consequence, in my humble opinion. We need to get a confirmed close, basically, above that region to mark and validate, I think, a larger turn in Euro. Here's the whole broader picture, okay? Weekly chart. You guys have seen this before. Here's the confluence zone I'm talking about. 618 retracement, that's of the 2017 rip, okay, into 2018. That's this. It's kind of a big deal. And I respect Fibonacci, the whole theory of it, generally speaking, but you know how I feel about these major retracements. And then you have the 618 of just the near-term drop from July, right? Or is that June? The June high, I think. Right. So in any consequence, the 112 level comes out as a big level, right? We fail just ahead of it. Even if we still get there now, it's still a huge region. Not to mention just a decent pivot in price, just figuratively, just looking at this objectively. So this is your first hurdle after this breakout. We need to pay attention to it. We need to pay attention to it. It might be more. It might be worth. It might be worth more than. What is this? 56. What is that? 60 pip drop. So that's my point. And on its face value, it's just a weekly opening range right below resistance. So I'm being as objective as I can with this, but the levels are clear rather. 111.07 is your near-term support. That's now the weekly opening range low. That's now the lower parallel. Okay, you have this is the 138.2 if I'm not mistaken. Oh, it's a 144. Okay, of the range. Caught the highs right to the pip. And that converges on the 38.2 retracement. That's of the drop from the highs we made back in June. So everything is lined up. We just need to get, again, some Momo behind this thing. Ideal scenario, you get the gap lower, you get the drop lower, spikes into 111.06, maybe in that range, maybe between 111.06 and 111.82. but that's kind of the max I would want to see on the downside if euro is going to hold. If euro is going to hold. Now, if you're holding longs from down there, or if you're holding longs from the swing, just keep these levels in focus, okay? 111.67, 111.87, 112.08. If we get through that, I think there's, lots of room, but those are three levels that scare me on the upside on longs. So fade into that region, take a little off into that region, bring your stops up into that region. And if we break, hold them if you got them. Questions, comments, concerns on euro? It's number 3 on the session. Sterling. Here's pound. So as far as I'm concerned, it's kind of a clean setup, but there again, it's the same story with all of these this week. There's no momentum. Everything is just paused after last week's major ripper. So here's sterling on the weekly chart. Here's what it looked like last night. The big level of resistance as far as weekly resistance is concerned is still a little more room to the upside, in my humble opinion. You got that slope coming down right near that 786 retracement over the next couple of weeks. It's still kind of going to be the region right near 3077. 32 obviously has a couple of levels lined up at. Major support for me, objective week yearly open is 2754. Okay. And bullish inval, last year's low week close, comes in near 125.82. So that's kind of the major levels there for sterling on the longer term picture for the daily chart. The question is this week, it's a tricky play. You could see a scenario where it washes down to 2754 before moving higher. You're basically looking for that stretch and reaction near 3077. So I still think the broader focus is higher, but we could get a larger interruption before we see resumption. So momentum, right? Same highs that we've held for the year. We've talked about the fact that this thing hasn't been able to really breach 60 since the start of the year, and that would be an objective change in the momentum profile. Specifically, since the way I look at these things is like, okay, we were in an uptrend for a couple of years to the upside off that low that turned out to be still the low that we're still holding. And right after you made that overbought condition, you broke 40, and then you went into oversold. Since the oversold condition, okay, there's been no breaks of 60. Another oversold condition, no breaks of 60. So we want to see that shift in the profile to, again, kind of break that downside tone that we've been getting on that weekly chart. Here's daily, a little bit cleaner. So 29.90, who knew that it was going to be such a huge influential level? If you go back a couple of updates, guys, before we even got to 29.90, it was a level that we were looking at. And it was just kind of an objective swing low from the previous year's sort of drop. Here's what it looks like. Or the previous high drop or right before the high that we made right here, March, 29.90. There is the breach. Failure. Here's support still, 28.18, 28.38. 100 off the low, 6.8 off the high, my favorite pivot zones. And obviously, once we got the breach, there's the accelerated move, right? Once we got the pullback, that's where we failed yesterday. I still think if we get some downside, you could get a little bit deeper of a cut into that zone. But this is still what I want to see, right? Don't want to see things get deeper than this if this is going to hold uptrend. And all these slopes that you see in red are just based off this parallel, or a parallel off that slope, rather, I should say. So 28.18, 28.38 support, okay? Near-term bullish inval, let's call 27.54. Don't want to see anything get below the yearly open if this is going to hold. A breach, 30.77 still the next major upside target. Okay, intraday looks like this. So you try to break things down, you try to get some slope for the near-term picture, some structure to the advance. On its face, it's a very clean and simple weekly opening range. And point in fact, we are actually almost unchanged on the week. 29.20 is where we opened the week on sterling. We're sitting there right now. So opening range low comes in right at that sweet spot, 28.18, 28.38. I'm sorry, yeah, 28.18, 28.37 right here. 29.90, let's just call that the opening range highs for the week. And there's 30.77. So look for the immediate focus right now is look for a break of this range. If we break lower, I wouldn't really want to be in the short side. I'd want to see a reaction at one of these two levels for possible entries or failure to fade. If we breach higher, okay, 30.77, look for a reaction there or even to the upper parallel. To be quite frank, if we get through 30.77, you're probably, 32 is probably on tap. It's 1618 off the low. Kind of pushes it out into the latter part of next week, but it's there in slope and time, or in price and time, I should say. It's still on the menu. But the immediate focus right now is for a break of the weekly opening range for guidance. Here's what it looks like. Okay, it's basically an opening range play right off of the upper parallels. So your kind of assumption would be for a pull off the upper parallel more towards the median line on a downside break, and then fade that. But at the end of the day, it's a strong breakout. It's a strong upslope. See if we can't get 30.77. Questions on sterling? Now, obviously, you're still going to be always going to be the risk of headline event risk there on either side of anything that comes out from the Brexit talks, but all things held constant, pound looks pretty good. Questions, comments on sterling? Okay, Aussie, number 5. Here is what this thing looks like. Also very clean. I'm hoping this low kind of gives us a little bit of a rebound. Here's what it looked like last night. So a very nice play because you have essentially set the weekly opening range right in this pitchfork. Okay, so the play was look for a break. Essentially, we were unchanged almost on the week as we were writing this last night. Resistance 68.80. That's going to be the 50% retracement that gave us the kickback early in the week. 68.28, 68.30, a little bit of a nice key support zone that we're looking at. It's a basic 236, the 2016 lows. That's a level we've been following for a while. Here's Aussie on the longer term picture. I've adjusted this chart a little bit. If you guys recall, for the longest time, we were looking at the 2016 low we close and the 2016 low as sort of a pivot. But now that we've matured in price, we've matured in slope, this is the zone I think we need to focus on more closely, okay? 68.55 is where the zone starts. It's the same level. That's the 2016 low we close. The highs that we made in last month, right? 68.95, essentially you're talking about 69, but just ahead of it, converge on slope. And this is a slope I think we need to pay attention to. You've gotten 1 tag, 2 tag, 3 tags, confirm a 4th tag, and that converges right here in this zone as well. Just above that is 69.27, and that's the 618 of the drop from June. So if you look at these 3 levels, I liken them to the 3 levels we just talked about on Euro, right? On the top side of what we need to see that break into, essentially 112. It's the same thing here. It's the same thing here. You're coming off such major lows in Aussie. You've had such a really strong down test. Here's the, January fat finger drop. Call that what you may. If this thing pops through, I think there's a lot of room. Okay, so watch these three levels on the upside. Near-term support, again, this is the weekly chart we're talking about here. Near-term support, or I should say medium-term support, longer-term support, bullish invalidation for the broader idea that Aussie is making a larger low here, is 67.68. That's the low week close of the year. Okay, and that converges on basic slope support. 2-point touch, but a level to watch, right? Anything beyond that, you start to think Aussie could fall apart right again. You don't really want to mess with it. But this is huge. This is huge, really, really big. So that's the weekly chart for Aussie, just to give you a larger picture of how critical this region is. Here's the daily chart. No surprise that we got the kickback, and that's what we were talking about since the start of the week, is look for that pullback. Now we're looking for support on that pullback. Okay, we're looking for entries on that pullback. Why were we looking for the pullback? Very simple. Here's the 50% retrace. Here's last month's high close. Here's basic slope resistance. Okay, it's just a parallel off the monthly high. Boom. Here's the pullback. Now, even if we were to get as deep again as 6809, that's 618, which is again the sort of swing high that we made earlier this month, wouldn't necessarily be such a big foul, right? Could still work. Still would be looking for sort of a fade there. But the broader picture is, well, you're coming off big resistance. Look to buy this pullback if this breakout is legit. We're getting through the median line here. Intraday looks like this. 68, like I said, even if we get a washout towards 68, still puts you in the confines of this near-term upslope. This is just a pitchfork off the lows of the month. The upper parallel, beautiful catch of the resistance level. Here was that parallel that we were looking at like essentially last night, right? There's the median line. You got the break. Look at that dip right into 68.28. And for now, it's holding. Okay, if we get some upslope here, if you guys got any long positionings on this, or if anyone tempted that, 68.55, okay, start to tone a little bit off, look for a pivot there. Right now, okay, we're gonna shift these levels over just to acquaint or give it closer reference to time. Now it converges on the median line. Interesting. And this is actually the weekly open here too. I want to label that. I don't want to get too crazy with these levels, but 68.44 is also the weekly open. So if this were to hold right here, I would expect to see one more downside move, actually. If it rallies and fails here, again, you're just right in the weekly opening range. You have to wait for that break. If it dips or drops into this zone, I think that's where you want to pay attention to if we can get a larger positioning. There's a 38.2 of the advance. Actually, you can choke that up. Sorry about that. 68.02. Choke it up just a bit. All right. I think that would be the better entry if you get it. I just don't know if it gets that low. So Pooja, you're looking for the Kiwi longs, right? We'll hit that in a second. But it's very similar to this move. I just want you to recognize and highlight the only reason, again, I go on just structure. Whatever's cleaner from a technical standpoint. Let's clean this up a little bit, actually. There you go. All right, take a snapshot of this, guys. If you're trading Aussie, just a little bit of an adjustment from last night's levels, mainly just on that retracement. Just chalked that up a little bit, but Still looking at the same picture here. Resistance 68.80. Okay, that's and if we breach that, it's going to be basically break of the weekly opening range high. Then you're looking for 69.10 and 69.23. Those are your next upside targets. Questions on Aussie. Number 5. I was going to hit crude now since it was on the update, but let me hit Kiwi real quick, and then we'll come back to crude. So here's Kiwi dollar. This is what we looked like early in the week. Also a trade that was very similar to what we're looking at here with Aussie, right? We came into the week looking for resistance. We got resistance right at that upper parallel. The risk was for a little bit more of a setback there, but we're still broadly constructive. Same picture. Here's Kiwi. Okay. Little bit cleaner in that we're kind of coiling up, Pooja. It's just sort of coiling up into the initial weekly opening range. So here's your Monday, Tuesday stretch. We've just been in that range ever since. Now, that range is right below a resistance zone that we were watching at 64.24, 64.28. It's a 38.2 retracement and a 2018 swing low. Here's Kiwi. Let me go back one quick. Here's Kiwi on the weekly chart. So a big region of which we want to pay attention to, okay, there's the 2018 swing low. You can see pivots here before. You can see that we're reacting to it now. The first major zone or the first major pivot since that huge reversal, really nice move on divergence, off of basic slope. Here's just parallel off the high here, dropped to the bottom of the low that we made in January. Caught this low on a closed basis. That's basically what capped it. And this is on the back of a 4-week advance now. What do? I mean, this is the first major zone of resistance. So yeah, I think we get the pullback. Well, we're getting the pullback now. How deep does that pullback get is what we're trying to ascertain. Here's the daily chart. And again, guys, if you don't see the daily chart, an intraday chart, and weekly chart accompanied, click on the link. The previous update will always have it for you. Here's what we were looking at. Okay, 69.12 resistance. If we breach there, there's that big zone, 64.24, 64.28. Well, we got the break. There's 64.24, 64.28. Here's the pullback into what? Right back here at 63.91. We're right back here again. So we did a boom, boom. Okay, so the initial major focus right now this week on the daily charts is on a clearing of this zone. Break below 63.91 would give us a larger sort of setback. You'd look for support into 63.47 or thereabouts. If we topside breach, okay, the 75% line, I'll watch that for a soft target. It lines up pretty nice actually with last month's high near 64.50s, but the big zone is going to be 64.84, 64.97, this zone right here. You got the former swing lows from June, the former swing lows from May, the 50% retracement, the entire drop off that July move. You got the 1618 extension of the advance off the lows. All of that lines up right here in this zone. So Pooja, I'm with you on the long side if we get that breach and pivot above 64.24, but I just wanted to highlight to you, this is kind of pretty big. This is kind of pretty big. So my point being, weakness below 63.91 on a closed basis, it wouldn't be too far off to expect a larger correction. You know, ultimately I want to buy that, but that's the risk if we slip lower here. Does that make sense? All right, so that is Kiwi on whole on the daily chart. And again, here's the intraday. You know, basically just look for a break of this weekly opening range. If we pivot below, there's that key zone. Looks like it wants to flirt with it now. Pooja says, yes, what levels would you look to buy? So the levels of which I would want to just pay attention to for possible entries. Again, ideally is going to be this zone right here. Now, let me do one more thing. So again, I don't know that this is a registered high, but I just want to watch a couple of retracements real quick. Stay with me. Yeah, so look. So look, a basic 236 would take you right back into the weekly open. So that's like 63.18 into 63, I'm sorry, 63.81 into 63.76, this zone. That's just your weekly open 236. I know I don't know if I'd look to buy that per se, but um, that's your first pivot zone. Ideal scenarios on a spike would be somewhere near the median line right here or into this zone straight up. The 38.2 is right there. So even a basic 38.2 takes you as deep as 33 or 63.46. The top of that zone, again, being 63.56. So sort of this zone or this zone. One of these two zones would be the ideal scenario to see if this thing finds some exhaustion. And that also would be kind of a play where you slam into the weekly opening range and then it fails. So the weekly opening range low is right here. It essentially drops into it, maybe dribbles a little bit lower than failure would be the ideal scenario. If this near-term consolidation, okay, let me get rid of this. If this near-term consolidation does breach and resolve higher, I'd still think you're at risk for exhaustion ahead of 64.50. Okay, last month's high and the upper parallel downtrend resistance. So this would be an exhaustion point where it could, again, fake out everyone, breach the opening range highs, and sort of failure. So for me, on a play like Kiwi, I'm more of the player like sit back, let this thing pop, and kind of fade that move, unless you're already in it. So that's kind of where I'm at with this thing. If you're in a longer term long position, anything south of 63, I don't think you want to necessarily bail on anything. I think you want to sit tight. If you're looking for fresh new exposure, I think the play is if it gets the drop, look to buy it, or if it rips and fails first before we get this drop, I'd fade that. I'd look for a short off that, a nice little pullback. Ultimately, we're looking for a larger breakout here, guys, but the trade's a little tired. The trade's a little tired, and we made a really nice objective rebound or reversal, I should say, off of the upper parallel. So for me, again, basics. Just go right back to basics. A reversal off the upper parallel. You kind of look for a pullback to the mean, a pullback to the median line, and just a reset to that nature would still take you down to this zone. I'm already long, but haven't got much left in it now. Okay, great, Pooja. You're in the ideal scenario then. Yeah. I mean, um, you're choking up your stops, right? I know that you do that a lot with me as well. So I would be bringing up my stops. And on the upside, I mean, 64.50 for me is so big. And again, it's not just that it's a monthly high. That's just the sugar on top of it. Just from a slope standpoint, it's pretty big. It's pretty big. Questions, comments, concerns on Kiwi? All right, let's double back real quick and just look at crude, and then we'll jump into that last update there. Here's oil prices as they stand now. Woo-wee, there's the breakout. All right, so we talked about it last night, just on account of where price was trading right into the upper parallel. And remember, I think I might have even said something. Ooh, right here. It's likely to be accelerated if we get it. I think we're getting that now. We got a breakout. Okay, we got a breakout, plain and simple. We've been following this thing for a while. We've been looking at this near-term consolidation and price that it was coiling up, coiling up, coiling up. Kind of our line in the sand, if you guys remember from the previous update, was 54.46. Okay, there was 54.46. We even highlighted that that was the breakout level. If we see a breach of 54.46, you'd expect to see a pretty accelerated move. Your first target being somewhere in the range of 55.70, right? It's a basic 38.2. So long and short of it, we got the break. It ripped. 55.70 got taken out real quick. Just above it was the upper parallel. And that's why I was saying last night, if we get the breach, what's our basic assumption? You guys hear me say it all the time. A breach of upslope resistance typically and oftentimes can be the sharpest part of the rally. Your next upside target's 55.17 in that scenario. That's a basic 50 of the drop from the September high. So, I mean, here's what it looks like now. Oops. Okay, we're getting the breach. Next upside levels 57.17 if, and I'm always giving you the tail end of the trade, guys, because I always want you to be covered, right? Ideal scenarios, all lollipops and pumpkins. Yeah, this is our targets, and let's just sit. But we always have to brace for the worst case scenario. If we were to open up U.S. trade session, 9:30 hits, and all of a sudden 56.50s, 56.70s, and then this thing fails miserably and ducks down below this slope, you could see a massive washout in this thing. Okay, so, and especially with all the headline geopolitical risk that we're getting right now. My point being, don't jump in and start chasing this if you're not already in it. Okay, these are high risk moves on especially on things like energy prices with what's going on right now. So you're testing multi-week highs, you're breaking up slope resistance, hold them if you got them, okay? But not a time to jump into new fresh exposure on the long side. If you got them, 57.17, like I said, your next upside target. That's just the objective 50% retracement. The 618 comes in at 58.60s. That's right, I said it again, 58.60s. It's not what the news would have you think, especially with everything going on, but those are the levels. And let me just see. Ooh, a little sneaky 1618 comes in there. All right. Interesting. And the 100 comes in here. Okay. Upon reassessing this right in front of you, I would be very weary here. Let's try saying that quick. Very weary here. That's interesting. 56.30 ends up being two equal legs off the October low, which I hadn't factored in first. Watch for a reaction here. This actually might be a decent level of failure. Yeah, I'd actually be looking for this thing to turn here, or at least see some sort of weakness. Look for a reaction. Look for a reaction. If it pivots through, 57.17 is on tap. That's another dollar on the play or just below. I think you're all right. This is for me very very telling, and actually a perfect area for a throwover type of trade. Breach of resistance, everyone gets faked out, and all of a sudden that's where all the guys are taking profits and getting out of it. That's the short run right there. Look for a reaction to the US trade session. So let's clean up this 38.2. Let's call that high from earlier, the October opening range highs come in here. Kicks this out. Clean this. And kick that out to here. It really stretches it on time, but bullish inval, guys. It has, unfortunately, it has to be below yesterday's low. So that's like 53.60. Yeah, that's what you'd have to leave as bullish inval. I hate it that it's so far away from where we are right now, but that's the broader picture. Right now, uh, ideal scenario again for me, right, as I'm putting this on, where I'm talking to you guys, is some sort of failure right here. If you're wrong, you're going to be wrong pretty quick. It's going to pop through 56.30, and you're going to see like a nice accelerated run. It's still going to be a break of upslope resistance, but as it stands, I think you want to pay attention there. It's sending you an hourly crude chart on MB4X. Let me see what you got. All right, so here's Pooja's chart. Okay, I see what you did here. Yeah, I mean, don't get me wrong, guys. We're still on the upslope as far as constructive. Um, and I know you're looking at that a longer term. It could still give us an upslope play before failure, but I'm more in tune with this near-term chart to be use this more objective high, low, high, or excuse me, low, high, low. Let's see. Let's see. Broader idea though, right? Upslope resistance that we're heading into. I'm with you on that. All right, so that is crude. Number 7. Let's hit Swissy number 8 real quick. Here's dollar Swiss. Man, this thing has been a ridiculous play as well. So, whoops. The update on dollar Swiss. Look like this. Here's what it looked like into the start of the week. I'll start from the beginning on this one because it's such a story to tell. Here's dollar Swiss. Look at this thing. Big old reversal off 618 yearly range. We highlighted major key support at the 2019 Open. It's an objective level. We always talk about how those levels come into play. And we got the kickback right into it. That's still the level of support. We saw a really nice bounce off that this week. Here's what the daily chart looked like heading to the start of the week. Again, the break of this nice, real clean channel. Don't like that it's so sharp, but basically it was a false break of this downslope resistance. And we failed miserably. Break took us right below the monthly opening range. Here's the first level support, resistance at 99.05, right? That's the initial monthly opening range lows. Here's what the daily chart looks like now. Okay, we came right into 99.05, the initial monthly opening range lows. So clean. And that's where the slope is as well. So we're kind of just sitting there now. It happens to be up downslope resistance on the near-term charts, and we'll look at that in a moment. But I just wanted to highlight to you guys how clean this trade has been. And it's a far cry from this ridiculous chop fest that we got early in the month. Whether it's like, is it a breakout? Is it not a breakout? We should see follow through. It was a 618 reversal. What the hell do we do? There was the break. Nice support bounce. Nice resistance hold so far. So far. Here's what it looks like on the intraday chart. Really clean. 99.11 is our line in the sand. That's what it needs to hold right now if this is going to work. This pitchfork is the same one that we've been following, okay, from earlier in the week. It's just an objective one right off the high. We noted that not only was 98.38 the objective yearly open, but it was also the 50% retracement of this near-term advance and the lower parallel. So you had like a three-way confluence there. Really nice spot to find a bounce. Great. Look for 98.91 and specifically 99.11 for possible failure. Well, here we are. So if you took those shorts or if you're holding a short from in there, I'd have a stop right up against this high right now, as close as you can get it. Real nice. At this point, that would invalidate the downslope resistance, would invalidate that 38.2, and there's room all the way up to 99.50 if that happens. So a nice place to have your stop. If you took a limit at 98.91, or if you booked a little bit, I don't blame you. It's a real tight trade, but you're essentially looking for a move back at least towards like ideal scenario is the weekly open, but 98.73 is your next downside target. Okay, just a nice pivot. Key support still 98.38, 98.43. And bearish invalidation is still, for the near term front, it's still 99.11. 99.55 would be a big change things. That would change things up big time, big time. On the broader front, that would be like, essentially looking back for the monthly open. Okay, and that gets you all the way up in basically near parity again. So long and short of it, this needs to hold right now. If this breaches, you're basically 99.50 bound. Okay. What else could I say about this? That's Swissy. I mean, it's just been like pretty darn clean. It's the 60-minute. I mean, even on a 60-minute, you know, let's see if we can get some follow through on this thing. Okay, gold, and then dollar CAD, and we'll wrap things up. Here's number 9, gold. So our basic premise has been looking for the last low, the washout in gold. It just hasn't been able to get any legs behind it. And the dollar drop, right, is propagating, at least putting a floor under this for now. So look, 1502 is the 618 of the near term drop off the highs of the month. The thing hasn't really been able to find any type of stretch for this slope to have any merits anymore. So like, even if you tack on the 1236 or the 138.2, it's just not giving it any play. So I'm kind of thinking to dump this blue slope right now, and just look for this consolidation break, and that again would highlight basic slope coming off the highs at 1502. So I kind of don't want to complicate things here on gold. You know what I mean? It's been a very decent play. The lower parallel here was really nice on the reversal. This was a huge confluence zone. Again, my favorite plays. 100 off the high, 618 off the low. Just magnificent. Beautiful play. Took us right into that 1460 level. That's what caught the lows. So maybe we're just looking for, too ideal of a Goldilocks scenario for one more low. At the end of the day, look for this consolidation break. So I'm going to go ahead and pop this right in front of you. Here's what it looks like right now. It's been real tight, been super tight. 1502. We close above 1502. I think we're on resumption mode. You look for 1522 again. If we fail there, or even if we fail here at 1496, I still think that risk for a tag of 1470s, again, the October Open, the 786 retracement, I still think that would be a risk. But it's got to give us something. Last week's opening range, just to put things in perspective, never really gave us a break or a clear. So this thing is coiled. This thing is coiled. I'm usually all about the gold trade, but there just hasn't been any juice in it so far for me this week. So any questions here on gold? Going once, going twice. Last but not least, is dollar CAD. I'm going to put a piece on daily effects later today, but I still have to work these levels. Look, downside break of descending channel support or pitchfork support, typically a sharp part of the move, pretty sharp. Okay, since that one drop, we've already gone down another half percentage point. The 38.2 comes in at 130.50. That was the target. It's not really triggered yet, but we're damn close. Here's dollar CAD early in the week, and here's where we are now. So we pivoted below this region. Here's 30.50, the next downside target. We're kind of flirting with it, right? And momentum is getting a little tired. So I'm getting a little concerned if you're holding that short. Maybe you don't want to get too stringent, but into the US Open, look for a reaction here. Don't let any profits fizzle out. 30.50 is the target. That's a 38.2 retracement of the advance. Look, at this point, if this real sharp descending slope breaks, 31.07, okay, 31.10, let's call it, that would be, in my mind, near-term breakout. You'd look for a rally towards the weekly open. You'd look for a rally towards 31.50 again. But this is sort of the zone of resistance, same as this on the way down, zone of support that we want to pay attention to, I think, for validation of this real sharp slope. Again, I hate these real sharp slopes, but for some reason in this market environment, they've been playing out. So just watch that. Any lower than 30.50, next downside target hasn't changed. 29.70 is right on tap. Dollar CAD looks good. Still like the broader downside trade. I just think, again, some of these trades are a little extreme, near the extremes, getting a little tired. Here's what dollar CAD looks like. Don't trust me. Here's what the picture looks like. You can gauge it for yourself. Huge drop off that reversal from 33.50. Beautiful break of the monthly opening range. It's late in the month. It's going to be the 25th tomorrow. Don't get too gung ho about a new fresh short positioning from here. Look, 30.50 is the 38.2. Just below that, okay, you have some slope lines here we've been following from this larger pitchfork off of last year's high. But you'd expect some sort of setback. Daily momentum struggling into 30. It's been pretty massive drop. We've covered not only last month's entire range, but almost the range, yeah, we did cover basically the breadth of last month's range. So you get the picture. Broader picture is bearish. I'm not too gung-ho about getting super bearish from here. Look for a larger reset or a larger bump to get back in. 31.55 would be a nice area to look for resistance if we get that high. Questions on dollar CAD? Now, interestingly enough, next week you do get the Bank of Canada, if I'm not mistaken, the same day. As FOMC, but there's going to be a lot of event risk on tap right into the close of the month, And this thing was a clear monthly opening range break lower, but we're setting a pretty nice low right now, I think. So some things to keep in mind as we head into next week with all the event risk on tap into the monthly close. Man, things should be pretty exciting. We have a lot of stuff on tap. Any questions beyond that, guys? Again, just a quick reference back, Pete, to the SPX levels, man. Here we are. Look for that stretch there, okay? 30.20, 30.26. Just that whole zone. Questions, comments, concerns? Last chance. Again, we'll be back on regular schedule, hopefully next week. Hey, Pooja, there's that catch in crude. Watch that as well. Pooja says, thanks. Target for SPX. Yeah, so I just showed you that chart. I don't know if I saw that message late, Pete. If it fails, so if it fails here, same levels, man. 30.05. That's that reversal close. I think it was a weekly open from a couple weeks ago. Has been a decent pivot ever since. And then from here, you're going on slope. So watch that. One touch, two touch, three touch. You know what I'm saying? It's going to be determined on time. So like, let's say it fails right into the U.S. Open. You're basically looking at like a tag of 30 or like 29.90s, 29.95 right here. All right, just a reference point. Hope that helps. Hey, he says, great, thanks. You're more than welcome. Guys, best of luck trading. Have a great weekend. I'll see you on Monday for the free session on daily effects, and then right back here on Tuesday and Thursdays. Best of luck trading, guys. Cheers.